Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today I want to discuss what do you do when everything's coming down and you've run out of money, right? So, before I get into it, y'all know how we do. Like, subscribe to the channel, hit the notification bell. So, since 2022 has begun, many people have been seeing the red days, right? We've been talking about this as a bear market for the year 2022, and it's been pretty much hard investing. I mean, many of you have seen some profits, some short-term profits, as far as money spiking up 10%, 20%, and we're seeing some small gains. But some people were investing back in 2021. They're seeing some massive losses, up to 20 and 40%. And they need to know, hey, what do you do when I've been averaging down, constantly dollar cost averaging down, which means you're bringing your average down on the money that you have, and I'm out of money now. What do you do? Y'all let me know in the comments what y'all think, right? The simple answer is you relax. You relax. It's as simple as that. When you're down those large percentages and you didn't get out, right? Say, for instance, you bought Facebook, like I did. I bought Facebook and it brought me down, right? Facebook pulled me down major, and I'm actually trying to look for it now. But I bought Facebook and I was expecting positive earnings for them, right? I was expecting positive earnings for them, and they didn't come through for me, right? So Facebook, you see here, Facebook, and I'm down currently 21%. For me, Facebook is a long-term buy. I believe in it as a company, and I think Meta Platforms is going to do some great things going forward. So instead of me selling this, knowing that I'm down and taking this $200 loss, I'm going to average down, right? I'm going to bring my average down to where it's so much easier for me to get out. If I were to buy 4 more shares, we could calculate it. So let's see, right? I'm gonna do this. I'm gonna do it the simple way again. 4 more shares at 219. Now, 219. So let's do 280.32 minus. Minus. It's not minus. It's plus 219.55, and I divide that by 2. My average will come down to 249, right? So 249. Let's do the math on that. So 249.94. 249.94 minus 220, the current price, minus 220.61, and we're gonna divide that by the price that we had, which was, y'all, I'm messing up, which was 249.94 divided by 249.94. That's 20. That's not right. So divided by 249.94, and we get our percentage. So now I will only be down 11%. So times 100, I would only be down 11.73% versus this 21%. It is that much easier for me to gain 11% in a day or 2 days versus the 21% in a day or 2 days. So bringing your average down makes it easier for you to see returns going into the future. So, and how much would it cost me to buy those 4 shares? It would cost me $878 more dollars to buy those shares, and that would bring my average down. So I would potentially see more gains sooner. I could buy even more shares and bring my average even further down. That would bring my average cost, what you see here, even further down. Meaning I will be that much closer to seeing gains if Facebook were to make some positive returns. We know over the past week, really since earnings, Facebook has not been seeing returns. Since February 2nd, Facebook is down 31%. I'm only down 21% because I have averaged down. I only had 1 share of it, and I bought more as I saw it coming down. I did not expect it to come down this far. So now that it's kind of leveled out here, it's been sitting out in this range for the past couple of days. Now it's leveled out here. I could potentially buy more, bring my average down, and be comfortable knowing that I'm only down 11% versus the 21%, and I could see returns that much sooner. So, again, what do you do when you've already averaged down and you're out of money? You sit back, you relax, and you wait for the return. Hopefully, you guys at this point, you've been watching me and you've been investing in solid companies. So we know here, these are the list of companies that we're currently looking at, the stocks that we're currently looking at that we plan on investing in, and we have our entry prices. Luckily, you guys see I have here two companies that I took off the list, which was JD.com and Roblox. I think I took this off several weeks ago, if not a month ago, and we are not losing those because these two companies are actually losing right now. But the rest of them, you guys see here, these are the entry prices. So I think the only one we're probably losing on these two would be PayPal and Facebook. The rest of them we should be looking pretty good on. That's including the high volatility and medium volatility companies. The rest of these here, they're making money right now. We should be in the positive at least 1% if you bought them at these entry prices, at the entry prices that I mentioned. Now I say market price on VTI because we want to continue to average into that throughout the entire year. We're gonna average into that. So Roblox, again, that's one that I took off the charts because I was watching it and I see it was providing a lot of bad news, and I expected that it wouldn't return what it was supposed to. Look at what it did in earnings today. Much like PayPal and Facebook, it had negative earnings. I think it was down 200% on the earnings per share, over 200% on the earnings per share, and it came down 15% in the aftermarket. That's major for this company, especially a company that just recently IPO'd a year ago. But say for instance, you did buy Roblox early on before we got to the entry price, right? We had an entry price of $79 on Roblox. It looks like, yeah, 79. If you did get in there before I got in, say you got in here and you're down, say you have 5 shares. If you buy 5 more, it costs you $300 more, and you got it at $79, you would bring your average down, so you would no longer be down this 15%. You may be down about half of that at this point. You will be down lower than that, maybe 7%, 6%. You'll bring that down about half, and you could wait on Roblox to return, because as a company, Roblox is actually a good company in the long term, for the long term. And you can continue to average down into this until you feel like, hey, I put enough money into this company and I no longer want to average in. You simply wait on it to make its returns. If you decide to sell it, you sell it. If you want to keep holding it for the next 5 years, you continue to hold. And that is what you do in this market, right? In this bear market, you average down. You average down as far as you can. You wait on your returns. At that point, you can decide to either take profit or continue to hold for the long term. So far, I believe I've been telling you guys nothing but companies that I believe to be good companies. So I don't really have that fear of what's it going to do, right? We've been discussing good investments. We should be pretty green and positive. But if you're not, you average down. When you run out of money, you sit back and relax. You find other plays to replace those. After you put in enough money, again, we show consistency, right? So we're still adding in money. And you can supplement that money using options. You can make options on the way down or up to add more cash into your portfolio. And you can use that cash to average down. But that's really all you want to do. You average down. After you've averaged down enough, you wait. You kick back and you wait. No rush. The stock market isn't going anywhere. Your shares aren't going anywhere. I know it hurts to see those red days, but you have to have some type of mental fortitude to be able to go through it. If you get to a point where you can't stand to look at it anymore, take a break from your account. Stop looking at it a week, 2 weeks, and everything. I guarantee you within the next year, 2 years, if not sooner, I do believe we're going to have a run up much sooner. Then you when you come back to look at it next year or so, you'll be so surprised at the gains and the profits that you made. So that's what I got for you guys today, because I see a lot of people being skeptic and terrified about these prices dropping, and they don't know what to do. So hopefully this gave you some insight on what to do and how to invest going forward when you're seeing those red days and you don't know, and you just pretty much seeing blood. You sit back, you relax, your dollar cost average down. Thank you guys for joining the journey to become wealthy. Hope y'all have a good night.